Bitcoin, what should we expect next? We are making new highs. The market, the optimism is coming back into the markets, but what should you anticipate for next? Because a lot of people are going to be buying right now, and you might be feeding the emotions of, hey, have I missed the train? Should I be buying Bitcoin right now? Well, that's what we're going to look at today, looking at the technicals using Elliot wave and Fibonacci, which really measures the psychology of the markets. So let's dive straight in. So our last video was actually on the 28th of August, which we posted, which is not that long ago. And it says, look, has Bitcoin hit its local high? Should we anticipate bearish move over the next 2 to 3 weeks? But since then, we've seen more highs. So now we want to just look at, right, what does that tell us and what kind of information can we leverage to give us an indication of what's likely to occur next? So the first thing that we want to take into account is what is the weekly momentum? So we are going to look at a macro picture. Like, we're really going to zoom out and really look at this from a macro picture. And one of the key pieces of information that we want to leverage is this stochastics RSI. This is a momentum indicator that tells us, is the momentum to the upside or is it to the downside? So right here, when the red line and the blue line are in this, it's called the oversold zone, this top level of the indicator mark, and the blue line goes below the red line, it tells us that the momentum is turning downward. Why is that important for us? Well, let's just look at the last few reversals. So we've got this high over here, and it marries up relatively nicely with this high. This high over here marries up nicely with this one, and these ones down here is a bit more choppy and is not as clear. But this one here, we want to anticipate this could be a local high, and then we should anticipate a correction. However, now we can jump into the daily chart to see, okay, this is what's likely over the next 2, 3, 4, 5 weeks. Yes, but what about the next 2, 3, 4, 5 days? What should we anticipate? That's why we're going to jump into a lower time frame. So here you'll see up in the top left, there's a W, which stands for week. It means that each piece of data is just measuring week by week. Now we're going to measure it day by day. So we're going to go into, I keep it in the top right hand corner, this one over here. I'm going to get rid of a lot of these arrows. Let's just clean up this chart for a second. Let's even just clean this up, Get rid of all of this. So what we have is pretty much the same as the last time. You know, even though we've got this optimism coming into the market, what you'll realize, you know, history doesn't tend to repeat itself exactly, but it tends to rhyme. And what I want to remind you of and remind us all of is what happened not that long ago in this region of the market, right? What we saw was this amazing strength with a correction, but then it started to run out of steam. Look, every move got smaller, and then it got smaller again, which just tells us that the buying power is decreasing. So this is, if you ever heard the terms of the bulls and the bears, the bulls drive the market up with buying behavior, and the bears claw the market down. And when the bears overtake the bulls, the price action goes down, and that's what we saw here, this big price correction. Now, on a micro level, it seems that we've got this a similar kind of move happening. So if I just get rid of this, because this is not obvious to see, we might even just get rid of this as well for a second, and I might even just get rid of these lines so we get it really, really clear. Are we seeing a similar kind of trap? It's like a trap, because look, all this optimism, and there was a chunk of people that bought up here, right? That's just natural. But the pros bought down here, right? And they're selling up here. So are we seeing something similar when it comes to this part of the market? Well, let's just have a look. Let's just zoom in. Okay, I'll keep this other side on the chart as well, so we get the comparison. Look at the comparison. Really bullish. Look how strong that movement to the upside is. But look at the second leg. It's like it's running out of steam. It's less than the first leg, which is not actually common. The second leg tends to be stronger. And then the next part, again, it's got weaker again. And then we've made a new high again. But is it showing massive strength? That's what we want to be aware of. So we've got almost a very similar pattern that we got in this pink box up here, happening again down here on a micro scale. What happened after we reached this top? It was just a massive correction, big 50, 60% correction, right? And we want to be aware of that. You know, there's no guarantees in this game, but there are such thing called probabilities. So what is the probability of the next part of the market movement? Well, that's what we're going to look at today. in a very objective manner. Because look, when you're involved in crypto, all of us want Bitcoin to go up. Why? Because it drives the whole optimism of the whole market, and then everything moves up. So I want that to occur. But my job is to be objective, neutral. So can we look at the chart pattern? Forget that it's Bitcoin. Just what is this psychology telling us? So again, we have to take into account the weekly momentum is overbought. Look, it's right up to the top. That just says, look, that's normally an indication that the market over the next few weeks will be sideways to down. Doesn't mean we can't see higher highs, but we should expect sideways to down. But then we want to take into the consideration, what is the daily momentum, right? So let's just now zoom in to this part here. There's a couple of indicators we can use, but there's a couple of things that really stand out to me. One is the price has obviously moved up, right? There's no question about that. However, look at the momentum. The momentum is moving more towards the downside. And when you get a divergence in price moving up and momentum moving down, that's a sign of weakness, and that's a clue. It's a clue to say, look, there's probably a correction looming. We don't know exactly when, but I'm going to show you today when we'll get the first indication that the correction may have begun, right? So there's a couple of things. So let's just look at this. So we've got this pattern. We're gonna cover that in a second. But what I want to show you is the first clue that we've officially got the reversal happening, or a correction happening, and the high has been made, is when the price goes below a previous swing low. You might be thinking, what the heck is a swing low? This is a swing low, right? When the price goes up, it goes down, and then it exceeds the previous high. So now that's a swing low, right? So let's just draw a box around this. Swing low. Where's the next swing low? We've got micro swing lows and bigger swing lows. The next obvious one is this one, but more so this one, because we've got a clear movement to the upside. And then because the price has now gone above this point from here, the last swing low is down here, right? So you can see when you hear people talk about higher highs and higher lows, when we say higher lows, that means this. There's a low, as in the market's come down, there's a low, now we've got a higher low, and then a next higher low. So the first real indication for us that the market has reversed is actually if and when the price goes below this point here, right? If we get a strong movement to the downside, boom, then we can be more confident that the price has reversed. But we haven't seen that yet. Why? Because look, this price hasn't gone below this point, right? And now the price hasn't yet gone below this point, and now this point. So now let's just finish up with some Elliott wave analysis, because I need to remind you that the game is not about being right or wrong. It's about getting an edge in your favor, which is probabilities, and then acting upon that edge. So is now the greatest time to buy in Bitcoin? I don't think so. I don't think so. Now, we do need to be aware anything can happen. There could be a big news announcement. I don't know. There could be an announcement that Apple buys $200 billion worth of Bitcoin, and it drives the market crazy, and the news makes the market do that. That is always possible. We have to be aware of that. But if you already bought Bitcoin and you're looking to take profits, one of the profit strategies is, because a lot of you are asking me this in the comments, is you can just move your stop loss or your sell position below these swing lows. The thing that's going to indicate that the market has reversed is actually where your selling point should be. That's just a great strategy. And the fact that this momentum now is bullish, we can say that the market's likely to go sideways to up for the next 3 to 5 days. So we should anticipate and wait for the next bearish reversal, and that would normally coincide with the high. So now let's just finish up with this. So we're going to do Elliott wave patterns. It's going to be a bit of an update from the last video because we've got more price data. We're going to get the 1, 2, 3, 4, 5. So we've got what looks like a clear 1. Wave 3 is normally the longest and the most bullish. So we don't quite know yet, is this the wave 3 or is this the wave 3? We don't know that yet. But looking at what the information that we have right now, we'd have to go with this one here and then the final 5th wave. And we might get something called a 5th wave diagonal. That's what we had back in a bit more advanced Elliott wave pattern. It's the only condition where a wave, this is a wave 1, 2, 3, a wave 4 can go into the range of wave 1 and is more of a diagonal sideways move. it seems to be forming in a very similar pattern. And what happens after a fifth wave diagonal, if it ends up being that, is a very deep, fast correction. We want to be aware of that. And that's not obvious because a lot of people right now, just listening to the comments, listening to the news, listening to other YouTubers, this feels optimism. But it's not often a trap. It's often a trap where the market might even do this, but the people that got in down here are getting ready to sell, and it will drive the price down. So you just want to be aware of that. So what are the price targets now? If this is a wave 3, 4, and then a wave 5, well, the typical is 62% of wave 1 to 3 to 100%, and the minimum being 32%. So we've got these three ranges. But what I'm going to suggest we do, right? We want the probability in our favor. What we want to do is wait patiently. We can go to a faster indicator. This just measures is more of the immediate moves. All of these swings is be patient for the momentum to get overbought. Wait for the next bearish reversal, and then review where is the price. Because then we're going to have pattern. We're going to have the weekly momentum, which is still overbought in the top left. We're going to have the daily momentum in the top right, overbought or bearish, and then we can look more accurately at what's likely to happen. Because right now, there's no way of really knowing if the market's going to really explode up or if it's just going to have weakness moving sideways. But when the bearish reversal happens with the momentum, which will happen eventually, then we'll have more information. But the key thing from today is the first big clue that the market has reversed and the Bitcoin has reached a local high, and we should get sideways to down for maybe a few weeks, is that the price goes below, and it might go up, but it goes below the last major swing high. And there might be new swing highs as the market moves up. So there you have it. That was high level technical analysis using Elliot wave and Fibonacci. If you want to learn how to do this for yourself, because look, I only often do around 7 videos a day, and I know you're probably looking at 20 different coins. I've created a free masterclass covering Elliot wave and Fibonacci, so then you can start applying this for yourself in live data, so you can get the information that you need to help you make objective, high probability decisions. So if you like today's video, like, subscribe, hit the bell notification, and I'll see you soon.